Hello there everybody, a very good morning just about here in the UK, or good afternoon or good evening, wherever you're watching from across the world. It's very, very good to have you here on one of our live streams here at HowToTrade.com, across our YouTube channel, our X channel as well, LinkedIn, Facebook, and of course in our trading room itself. We're live across all of those today, so if you are around, feel free to pop up and say hello. I do apologise if I sound horrific because I've got an annoying cold, so I sound really dodgy this morning or this afternoon, so I do apologise for that, but we've got a job to do, and that is to basically give you the lowdown on the Bank of England interest rate decision. Last night or yesterday was a really fascinating session. I was a little bit disappointed with the initial price action we saw from that Federal Reserve interest rate cut after bigging it up, all day and all week. It was a little bit of a disappointment, but as you can see, as you probably have seen, is that price action that we expected was a little bit of a delay in the reaction, and that price action has started to play ball today, which is really stock market strength and dollar weakness. Really, that's really been the order of the day so far, and the US hasn't even woken up yet. So I'm fascinated to see how the US session goes in a couple of hours' time. The Federal Reserve yesterday cut interest rates by 50 basis points. We had Shane covering, who's one of our coaches and analysts over in the States. He covered the event live as well and covered the press conference. So if you want to know about anything, his thoughts on that, then feel free to check out the past stream section, and you'll be able to get the lowdown on everything he thinks as well. What do I think of it? What's my opinion on it? Well, I would say that it wasn't just a 50 basis point cut, it was quite a dovish 50 basis point cut. And they really played into the soft landing narrative, which is essentially saying that we're cutting rates not because we have to, we're cutting rates because we feel that inflation's falling and the economy is still strong. So they're trying to get ahead of the curve, because a lot of people are saying, are you behind the curve? I think the indications are potentially that they're more behind the curve than they are ahead of the curve. If I'm being honest, that's what history would tell us. Rates are still at a restrictive level, up at the 5 or 4.75% level. They're still restrictive for me. However, I do understand that rates did need to be cut, and I understand why Jerome Powell sort of had that narrative that we're going to come out and say that the economy is really strong and we're cutting rates because we're confident that the inflation's falling, and we're confident that the economy is going to remain strong. So that's my view on it. I wonder what your guys' views on it as well. Let me know what you think in the comments section. Hello to you all in the trading room. Dillaby, good morning to you. Hope you're doing well. I am well. Hope you are as well. Anna, good morning to you. Bruce Gordon, hello to you as well. I'm doing well, and I hope you are as well. We've also got people across our trading room today. We've got TR28 who's involved in the room. We've got Martin174. We've got Samson. We've got Clone. It's good to see all you guys. Thank you very much for the message. And also we've got Dan in the room, of course. Hello to you, Dan. Hope you're all good. I'm doing well, and I hope you are as well. I hope you enjoyed yesterday's session. I hope you're enjoying today's session, actually. It's been decent. What else? We've got Machine X. Hello, good morning. There was a lot of heat yesterday. There is definitely a shift in the market. Strategies may need updated a bit. Yeah. I think so. I think we're in for a period of potential dollar weakness, probably a few days or a good week, I think, of a real stock market surge. Do I think the 50 basis points was positive in the medium term? I'm not too sure, because if it does prove they are behind the curve, then we could see potentially that recession coming through, and we could see some stock market weakness. But yeah, definitely. And Scotty Thomas, hello to you as well on the YouTube channel. Hope you're doing well, and thank you very much for the message, and to all of you who are also on our X stream as well. Right, excuse me. Let's go. Just head over to the economic calendar, because we're done with the FOMC for now. We want to turn our attention to the Bank of England today, and the Bank of England are going to be delivering its next interest rate decision. As you can see, it's coming up soon, so it's in this green text here. I'm sorry if it's white text and you can't see it. I will get that changed. But you can see this is the news that we've got coming out. The interest rate decision is expected. About a 75% chance that the Bank of England are going to hold rates at 5%. Now, earlier this morning, there was some bets coming in that the Bank of England might actually cut rates today, and that's basically because people are saying, well, the Federal Reserve are, they're the front runners in the global economy. People tend to follow them, shall we say? And people are saying that, well, the Federal Reserve are cutting 50 basis points, and the Bank of England could cut today as well, not 50 but 25 basis points, down to also 4.75%. I'll be honest, I doubt that's going to happen. The Bank of England has a history of being a bit more cautious when it comes to, front loading stuff, so they probably won't front load the cuts. We've also got the Monetary Policy Committee. We get a voting split, basically. So we get the amount of people that vote for cuts, the amount of people that vote for hikes, and the amount of people that vote for keeping rates exactly where they are. Now, currently the forecast is for... Previously, we had 5 members that voted for rate cuts. But now we see just 2 members voting for rate cuts. That's the estimation. Previously, we had 4 members voting to keep rates unchanged out of 9. And now we've got 7 out of 9 that we're expecting to vote for unchanged. So although, if you want my opinion, I'm expecting the Bank of England to hold rates at 5%, where you get the market moves in this particular release is with this voting split, which you can see here. If we get more than 2 people voting for cuts, but they still hold rates at 5%, I think we could see some pound weakness. I really do. The expectation is for Bailey to actually be a little bit more hawkish, especially more hawkish than the Federal Reserve, which I think they might be, which is why I wouldn't probably play pound weakness against the dollar, but I would certainly play it against the euro. So my base case for today, and we've got 4.5 minutes till that release, is that if the Bank of England hold rates at 5%, but there's a change in the voting estimations, i.e. more people vote for cuts than what was expected, we could be looking at a more dovish Bank of England today, and that could be seen as, or will probably be interpreted as euro-pound upside. Okay. If the Bank of England hold rates at 5%, the voting is exactly how it's estimated, and the Bank of England, although they probably will hint at more rates, that's just the nature of every central bank at the moment. More rate cuts, that's just the nature of every central bank at the moment. I do expect, if Andrew Bailey in his conference is then a bit more hawkish and is a bit more cautious about cuts, then we can see that continuation of pound strength, which we've been, riding really for quite a few months. And I would probably play that either against the Japanese yen, which is weaker today, or the US dollar. Okay, so the pound is selling off a little bit as we head in towards the event itself. And as you can see, really what we've got here is a really nice 4-hour breakout on pound dollar. So a new high that's been printed. We actually touched yesterday on that FOMC. We nearly touched 1.33, which was my sort of bullish target. So I have to say, it's if you're going to be buying cable from here, I think you need to be a little bit careful, especially because what you can notice is here's our new high that's been printed. But look at that RSI indicator. That's a sign of bearish divergence, guys. And I think potentially, although I'm definitely not bullish on the dollar, if I'm being honest, I do think we're going to see the dollar trade below. I do think we're going to see the dollar trade below 100. I wouldn't play pound weakness against the dollar. Instead, I like to play it against the euro. Why? Why would I play it against the euro? We're on the 4-hour time frame. Sorry, you can hear that I'm not very well. On the 4-hour time frame, you can actually see that we've got quite a lot of support coming in really around this 8.4 level, 0.84. And I'll be honest with you guys, I absolutely hate trading euro sterling. It is such a horrific market to trade sometimes because it just does not move. However, and you will not hear me say this often, I think there's potentially a good long opportunity coming on euro pound, especially now we've taken out all of this liquidity at these equal lows. We've taken out this low, and we're still within a bullish sort of demand zone or order block, whatever you want to call it. and I think that we could see, this push higher at least up to maybe 0.8, at least not up to 0.85 maybe. Yeah, up to 0.85. It does have a tendency, euro sterling, so when it catches on, it can move quite quickly, which is quite nice. So, yeah, although we've been consolidating for quite some time, I'm looking to that now. Pound versus the Japanese yen. How long have we got? We've got 2 minutes. Let me just check if I've got any questions across any of our channels. 2 seconds. What next for pound sterling? We've covered that a little bit. What else have we got? Dan is long on euro pound. He said it's absolutely rubbish, but he is long on it. I do like euro pound long side. I'm interested to see if we get a little bit of a sell off in the pound off the back of this release. Now I'm looking at the pound versus the Japanese yen as well. And we're going to talk about a little bit about this after the release comes out. But we've got the Bank of Japan Monetary Policy Committee coming up, monetary policy decision coming up as well overnight tomorrow. So it's going to be a big 24 hours for the yen. And we can just see signs of life here. So if we're going to continue on that pound bullish streak, I quite like the look of potentially some more upside here in the pound versus Japanese yen. Now we've sort of invalidated this supply area. Okay, right. So we've got, how long have we got? It's pending. If the decision's coming in now, are we going to get a surprise cut? Or are we going to see? Okay, interesting. Getting some pound strength off the release. I imagine they've kept rates at 5%. They have. Interest rates are kept at 5% in the UK. What's the banking vote split? Is it a more hawkish banking vote split, or is it a more dovish? If anyone's got it before, let me know. It's not come out yet for me. Has anyone got the split? I will have a look at gold. W10, don't worry, I will look at gold. I imagine that this is going to cause some cable upside. Oh, we've had a more hawkish shift, right? Okay, so yeah, that pound weakness story I think is not gonna be the case at all. We've had a shift, an even more hawkish shift. Although, yeah, wow. Okay, so the voting split, we've now got an extra member which has voted to keep rates as they are. So we expected 3 less members to vote for cuts. We've got 4 less members voting for cuts. That's a change. I imagine we're seeing some pound strength off the back of this. There we go. Look at that pound dollar exploding to the top side. So yes, they have kept rates at 5%, but we've definitely got a more. Sorry, I wouldn't use the word hawkish here. I would probably say a less dovish Bank of England than what was expected in the actual forecast itself. That's really nice then. So I actually expect that today what we could probably see, especially on cable, is some more upside. Really, that's quite a telling print from the Bank of England. So we'll try and get that monetary policy statement up as well. See if I can get access to that. Go straight on the Bank of England website. Let's have a look. We've got it. Here we go. What do you guys think about that as well? Are you bullish on the pound? 19th of September. Here we go. I've got it, guys. I've got it. Right then. The Monetary Policy Committee sets monetary, yeah, we know that, and in a way to help sustain growth and employment. So what we're looking for in this statement is any sort of language around concerns about economic growth, concerns about the effects of higher interest rates on on the UK economy. If that's sort of not in there, then we've definitely got, again, more of a hawkish shift. As its meeting, they voted by a majority of 8-1 to maintain the bank rate of 5%. One member preferred to reduce the bank rate by 0.25. Anyone know who that is? The committee voted unanimously to reduce the stock of UK government bond purchases held for monetary policy purposes and financed by the issue of central bank reserves, blah, 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 blah. Monetary policies have been guided by the need to squeeze persistent inflationary pressures out of the system as to return CPI inflation to the 2% target, both in a timely manner and this bit here, on a lasting basis. So although it's a very different tone to what we had from the Federal Reserve, the Federal Reserve are a lot more, we don't want to see any more weakness in the labour market. The Bank of England are very much like playing the inflation game, and the Federal Reserve are very much playing the employment game. Who's got it right? We shall see. And yeah, this bit as well. I didn't really hear Powell talk yesterday much about the fact about wanting to keep inflation low. Obviously he wants to, but Andrew Bailey and the Bank of England are a lot more persistent on the fact they want inflation to stay at that 2% level, not just get there and then bounce, stay there, which means keeping a restrictive policy for a longer time, which as traders means pound strength, right? Until that point where it does start to cripple the economy and they have to cut rates really, really quickly, then you see that unwinding, then you see that pound weakness, but we're not there yet. Policy has been acted to ensure that inflation expectations remain well anchored. In the first case, the unwinding of the global shocks that drove up inflation and resulting falling should continue to feed through to weaker pay and price setting dynamics. In the second case, a period of economic slack in which GDP falls below potential and the labour market eases further may be required in order to pay and price setting dynamics to normalise fully. He's basically saying that we need to see more easing, more softening in the labour market in order to keep inflation down. Domestic inflationary persistence would then be expected to fade away, owing to the opening up of slack from a more restrictive stance. Wow, there's definitely a more hawkish report than I expected. Since the MPC's previous meeting, global activity growth has continued at a steady pace, although some data outturns suggest greater uncertainty around the near-term outlook. Oil prices have fallen back, reflecting in large part weaker demand. We've spoken about oil before. Market implied paths for policy rates across major advanced economies have declined. There's been limited news in UK economic indicators relative to committee. Okay. Yeah, I mean, you can read through as much of it as you want in as much detail as you want. I'll drop the link in the chat room for you guys if you want to have a read of that. But, so yeah, sorry about that, Dan. Yeah, that euro, we're definitely talking about a bullish pound situation here. Okay, right, so looking at cable, and I will look at gold as well, because I know people want me to look at gold prices. I know it's not relevant to the Bank of England as such, but we need to now wait for the press conference from... There is a press conference, right? It should be a press conference at 12:30. I'm not sure if there is. It's not on the calendar as such. Is it on our calendar here? Oh, strange. There normally is. There should be. My overriding conclusion to that report is we have a more hawkish, we have a much less dovish Bank of England compared to the Federal Reserve right now, and that opens the door to more cable long opportunities. Okay, where can we get those opportunities from? Because as you can see, the market has just broken out to a new high, clean break of structure there. We're now trading above the wick from the FOMC yesterday. Well, guys, this won't just shoot to the moon without us getting some sort of pullback. We now know the situation. That's good. I don't think it's just going to keep going and going and going without any pullbacks. And therefore, when you look at some potential pullbacks we can get. Let's just wait for the structure to settle. If we close above 1.33, that's great. We can then look for, some sort of retracement. If we go onto the daily time frame, if we look what happened here, we had our Fibonacci, and this was trade ideas we had in the trading room over the last couple of weeks. We had our Fibonacci retracement tool drawn in this way, and you can see that we got a reaction from that 38.2, and you notice that we had some good cable long opportunities as a result of that, whether that was via our trend rider strategy or whether that was via our smart money concepts methods. Now we're looking for something similar. Let's wait for this day to close, or this week to close. Let's basically wait for the new swing high, and let's go again. Let's wait for this. If maybe you can get even a bit of a deeper retracement this time, but the strategy remains the same. We remain patient. If you want to play it riskier, you can drop down to the lower time frames, and you can try and scout this. Maybe from the beginning of the Bank of England at 1.326. But I prefer the camp of sort of waiting for the markets to settle first before we just go jumping in. So yeah, and you can see that we're getting that pound yen strength coming through as well. There's a little bit to talk about here when it comes to yen. So this is just half of the story. Yes, we've got the pound strength story, but tomorrow, or overnight, should we say, 4 o'clock in the morning for me, might actually get up early to see what goes on here. We've got a really important decision, not just for pound versus Japanese yen, not just for the Japanese yen, but for global markets really. Because last time the Bank of Japan met, they decided to increase interest rates, and it caused a bit of a shock in the broader markets. It caused a bit of a shock. We've got an interesting decision coming. We're expecting the Bank of Japan Governor Ueda to keep rates as they are, but he's got a really tricky task of sort of announcing the hike path without sort of causing too much market disruption. So we'll see how he goes tomorrow. And tomorrow morning when I come on the stream, a few hours after the event comes out, I will actually break down the event for you and see what he said, and have a look into some of his language and see if that language is, again, hawkish, or if he tails back on that language, because that will determine our direction for the Japanese yen, particularly on like USD yen and stuff like that. So yeah, I'll make sure I cover that for you, but that's half the story here. But I think for today, we're already up 1.3% today on pound yen. If you manage to catch on in this move, then fantastic. For those of you who like to trade the trend rider strategy, we've got a bullish crossover now of that EMA 12 crossing over the EMA 36. So we'll wait for that market to pull back, and then we'll try and get on some more opportunities there as well. Okay, right. Let's just have a quick look at gold, because I know people like to have a look at gold, which is fair enough. This is basically my analysis on gold, and I'm sorry if it's a little bit messy. I will get rid of this indicator so it's not as clean. I was finding myself a little bit frustrated yesterday, because when I got that FOMC reversal, I was thinking, oh yes, come on, we're going to get gold down towards that 2530 level. I think a lot of people might have this 2530 level on their alerts. I certainly do. The reason I have it is because, I've said this before, sorry if I'm repeating myself, we've got the previous high that was broken, we've got a bearish order block which is broken, we've got a daily bullish order block, we've got 50% of the FVG. There's just so much confluence at that area. I am also aware that we may not get there, and it might be a case of trying to catch on to the momentum before we even get there, which, as you can see, if you manage to get in at 2547, then you would be laughing, because we're now trading up at these highs. If you want my opinion on where I think we could be heading from today, well, that was a really strong couple of 4-hour candles. I actually think that at some point we're going to see this 4-hour candle reverse, create some sort of wick, and actually see the market start to tail up higher. We could see more gold strength coming through. There's a lot of situations here which are causing this gold strength, And I've noticed that even as the dollar sometimes has rebounded, it hasn't really caused much of a slump in gold, which tells you the underlying strength in gold prices right now. So I'm bullish until I see otherwise. I'm not going to try and be a hero and say this is the top of gold, because I do think we could actually see, maybe today we could see a break above 2,600. We shall see. You can see it act as resistance yesterday. You may get a situation similar to what we had over the last couple of weeks, where we had that 2,530. Remember how we tested it 1, 2, 3, 4, 5, 6, 7, 8 times before we actually broke it. We may see the market consolidate here around 2,600. But again, that for me will just be a consolidation period, and I'll be looking for that next breakout again, and hoping to try and catch on to that, because there's a lot of things that are continuing to happen in the global economy which could keep supporting these gold prices as well. Okay, fantastic. Right. Anyone got any other questions for me that they want me to have a look at? Machine X says, how many trades are you able to get from your watch list weekly as we wait for setups that can take time? I'd say on average about 1 or 2 setups per week on that watch list. I do have a tendency as well to trade on the lower time frames with sort of 0.5% risk, so I can get some scalping opportunities if I'm in my sort of area of interest, which is sort of done by that Fibonacci golden zone. And then I use smart money concepts within that area, so I can get that. Thoughts on oil? Thoughts on oil? Oil, for me, my analysis, I've kept my analysis in there. I told you guys the other day that although we had a reaction from the 38.2, I was really holding out for a deeper retracement. I'm holding out for a deeper retracement here in oil, up towards 72, 73. The reason oil prices are bouncing is obviously because of the Federal Reserve's comments yesterday. They cut rates and they said that they basically play in this soft landing sort of narrative. That's okay, that's fine. So I believe that we could see oil prices coming up basically towards a 72.9, 73 call it. That's my area of resistance. Would I look to buy it? No, because we are in the middle of and I'm just taking it from this daily fib, we are bearish, right, on oil. I know if you zoom out on the higher time frames, it's a bit like selling the stock market, really. Don't tend to sell oil too often because the general trend is that oil prices tend to be, at least on the rise. I think there's an economic slowdown coming, and therefore I do think that the demand prospects for oil will continue to be halted over the next sort of couple of weeks or months. So I do believe that oil prices can, in this next week or so, come up to 73. But from there, I expect some resistance. If we don't get any resistance there, then I'm probably going to be turning bullish, especially if we get a break above 77. Uteshev is expecting euro pound to correct itself. I wonder if there's so much pound strength baked in that we do actually get a reversal. Doesn't look very strong to me. It looks like it's gunning for these lows down here. But you can see we are in a broader sort of support area. But it does look vulnerable. It does not fill me with confidence that I want to try and buy it, that's for sure. KB UK rate futures priced a 66% chance of a Bank of England cut in November versus fully pricing it in before the decision. There we go. That there says it all. That there tells us that the markets that we were expecting rate cuts coming from November, 100% chance, or near on 100% chance. That's now dropped to 66%. That results in that's what causes moves in these forex pairs, guys. That's what will cause some more pound strength over the next coming weeks. I do believe at some point KB they are going to need to cut rates. I do think they're playing a risky game by sort of ignoring almost the effects that this could have on the UK economy. And it may be that they don't front load rate cuts at the start, but there may come a time in November, December when the Fed are a little bit less dovish and the Bank of England need to be more dovish because they've got rates too high. And then that's when we see that unwinding of positions, and that's when we see that pound dollar weakness potentially. But for now, I still remain bullish on the pound. Okay, then everybody. That'll be it for today. That was your Bank of England rate decision live. Thank you very much for tuning in into today's stream. If you guys want to check out our trading room, it's over at HowToTrade.com. It's completely free. There's no subscription fee. There's no hidden costs or anything like that. We have a trading room which has our trading academy, has trading strategies, has courses in here, loads of courses, loads of modules. We have our live streams every single day. Myself and Shane, who's over in the States, he covers the US session, I cover the UK session. We have a streaming schedule. We also post market analysis in there every single day as well. So make sure you come and check that one out as well. And if you do want to trade with us at the same time, then feel free to have a look at switchmarkets.com, which is our brokerage. They are doing a deal at the moment where they'll match your deposit up to $5,000 in credit. So if you deposit up to $5,000, you'll be matched with $5,000. You can message me for more details in the room, or you can check out switchmarkets.com and find out some more information and speak to the team there. Okay, good stuff, everybody. We have a less dovish Bank of England. We have a more dovish Federal Reserve. That should spell for some more pound, for more cable upside in the next coming days or weeks. Good luck to all those trading. I am also expecting some more stock market strength. Thank you very much. Take care and trade well. Cheers.